$66 million in the year ending June 30th, 1999 to $13.8 billion in the last 12 months ending December 24, which is a CAGR of 18.9% over a 25-year period. Our annual profits have grown from 22 million in the year ending June 30th, 1999 to more than $2 billion in the last 12 months ending December 24, which is a CAGR of 19.4% over a 25-year period. And most importantly, we've delivered a TSR of 20.6% on a CAGR basis from the IPO till January 10th, 2024. And even more importantly, we also delivered the highest total shareholder return over the last 10 years among all the tier 1 India headquartered IT companies, and number 1 in cumulative TSR for the last 25 years. A remarkable achievement, and this is thanks to the support of our employees, our clients, our leadership, investors, and analysts like you. Thank you all. Now coming to our performance in Q3. Q3 relative to the market has always been a strong quarter for us, and this is attributed to our business portfolio mix. I'm pleased to share that our revenues grew 3.8% sequentially and 4.1% on a year-on-year basis in constant currency. Our operating margin came in at 19.5%. Our services business grew 2.2% quarter on quarter and 4.9% year-on-year in constant currency. This was supported by IT and business services growing at 5.8% year-on-year and 1.5% QoQ. Our engineering and R&D services grew 1.1% year-on-year and 5.4% sequentially in constant currency. HCL software business grew 18.7% quarter on quarter, while declining 2.1% on a year-on-year basis in constant currency. Our current quarter EBIT percentage for HCL software business stood at 34.5%, which is an all-time high for HCL software. Coming to bookings, we won 12 deals, which include 7 deals from services and 5 deals from HCL software in this quarter, and the total new booking TCV for Q3 stands at $2.1 billion. We're also noticing average duration of signed deals is getting shorter, which means the tenure of the deals is coming down. The shift towards shorter tenure deals naturally leads to a moderated TCV, but the more important metric in this context is ACV, which is good. On a year-on-year basis, our ACV is up 9% quarter on quarter and 23% year-on-year. We're seeing a sizable number of deals influenced by AI and Gen AI. Some of our largest deals that we signed this quarter are enabled by AI-led transformation. Our pipeline continues to grow and remain strong. It's broad-based, and it is back on several deals led by our digital application business, engineering and R&D services, and digital process operations. Both Americas and Europe have seen a healthy growth in pipeline. This pipeline is near all-time high. The only other time we had the highest pipeline was the beginning of last financial year when we had a mega deal in the pipeline. In contrast to that, this time we don't have a mega deal of that nature, but we have a number of big deals across verticals and geographies and service lines, a really very robust and well-diversified pipeline. In terms of geographies, verticals, and client categories, Americas grew 6.2% year-on-year and 1.9% quarter-on-quarter. Europe grew 2.6% year-on-year and 3.5% QoQ in constant currency. Rest of the world remained flat on QoQ, but grew 2.9% year-on-year on constant currency basis. As verticals, we had strong growth in technology, retail and CPG, and telecom and media during the quarter. We've added 2 clients in the $100 million category. We also added 4 in the $50 million category and 4 in the $20 million category on year-on-year basis. Our top 10 and top 20 clients continue to expand their business with HCLTech. Uh, Generative AI is getting more and more real. The cost of using an LLM or conversational models have dropped more than 85% since early 2023, making more use cases viable. We are witnessing an increase in momentum in data, AI, and Gen AI opportunities. AI force deployments and customer interactions in AI lab are increasing. Agentic AI is another big opportunity where we can enable our clients as they empower their employees and clients with more AI-led features. We've also received multiple analyst recognitions for AI and Gen AI solutions, including an endorsement from Technology Business Research of our AI Force platform, which underscores the impact that this platform is already creating. While our clients focus on strategic transformation with AI, Gen AI in high impact use cases, we are investing in repeatable horizontal and vertical solutions to really accelerate the adoption of high impact use cases. I had introduced Project Ascend in the last quarter, a project that steers our effort to further our operational efficiencies. I would like to report that Project Ascend is progressing well. Our teams are working at full speed to drive the priorities we've identified. We've also deployed 2 Gen AI-based solutions developed in-house to power our people function. There is a function, Talent Navigator, which augments internal and external fulfillment, and MentorBot, which provides highly personalized guidance and actionable steps for daily work situations. We continue to supercharge progress as the fastest growing top 10 IT services brand and continue to get recognized by media and analysts. We were recognized by Newsweek as one of America's most reliable companies 2025. We were also recognized by Forbes as one of world's best employers for the 5th consecutive year. We are the only India headquartered company in the professional services category to be among the global top 10 for 5 years in a row. We also received 125 plus leadership recognitions during the quarter that went by. Looking ahead in 2025, we believe clients are looking at increasing their IT investments. We do see an improvement in the demand environment with discretionary spending witnessing some uptick. They're investing to drive innovation and efficiency, and in these initiatives, Gen AI and data are at the center. While we are confident on the pace of medium-term recovery, bear in mind our Q4 outlook accounts for certain planned contractual reductions. On the positive side, small deals are getting converted quicker, while the large deals are taking a little more time to convert. With this, our updated guidance for financial year 25 is revenue growth of 4.5 to 5%, including the revenue from the acquisition of HPE CTG assets, which closed in the beginning of December. Our EBIT guidance continues to be 18 to 19%. And with that, I will hand over to Shiv to provide more granular details on our financial performance. Over to you, Shiv.
Thank you, CVK. Good evening and Happy New Year to all of you. Thank you for joining our Q3 Financial Year 25 earnings call. Let me walk you through our financial performance for the quarter. Starting with the revenue performance. Total revenue for the quarter is rupees 29,890 crores, which is a growth of 3.6% quarter on quarter and 5.1% on a year-on-year basis. Coming to the services side, services revenue came in at rupees 26,601 crores, which is a growth of 2% quarter on quarter and 5.9% on a year-on-year basis. Software revenue for the quarter came in at rupees 3,386 crores, which is a growth of 18.2% quarter on quarter and a degrowth of 1% on a year-on-year basis. Moving on to the profitability matrices, Our EBIT came in at rupees 5,821 crores at 19.5% of revenue, up 93 basis points quarter on quarter. Our EBIT increased by 8.6% quarter on quarter and grew 3.7% on a year-on-year basis. Net income for the quarter is rupees 4,591 crores at 15.4% of revenue. We are pleased to note that this is our highest ever EBIT and net income in a quarter. I would also like to spend a minute on our return on invested capital, ROIC. Our ROIC continues to improve thanks to our ongoing focus on profitability and efficient capital management. The last 12 months ROIC is at 36.6% for the company, up 385 basis points year on year, and services ROIC now is at 44.7%, up 455 basis points year on year. Software continued to improve with ROIC at 18%, up 160 basis points year on year. Cash generation is another highlight I would like to focus your attention on. Our cash generation remains very strong. Over the last 12 months, operating cash flow reached at rupees 23,836 crores, while free cash flow generation was at 22,701 crores. Our balance sheet remains strong with a gross cash at 30,010 crores and net cash at rupees 27,707 crores. Operating cash flow to net income conversion is healthy at 141%, and free cash flow to net income conversion is at 134%. This cash generation has improved on the back of our improved DSO. Our total DSO, including unbilled DSO, is currently at 77 days, a 2 days improvement quarter on quarter and 9 days improvement year on year basis. This is our best ever DSO performance in the recent years. Now for the shareholders, our diluted EPS for the last 12 months came in at INR 62.91, which is up 8.7% year on year. The board has declared an interim dividend of INR 12 per share for the quarter, and also on the occasion of completing 25 years of listing, the board had announced an additional dividend of rupees 6 per share. This means that total dividend payout for this quarter is INR 18 per share. The record date is 17th of January 25, and the payment date of the same shall be 24th of January 25. That brings our 12 months payout at INR 60 per share, effectively distributing 95.2% of our net income. That's all from my side, and I will now hand it over to Ram for HR update. Over to you, Ram. Thank you.
Thank you, Shiv. Good evening, everybody. I'll also join CVK and Shiv in wishing you all a very happy new year. In the opening commentary, CVK has already talked about how we have grown over 25 years and the December quarter ending headcount of 220,755. That's a net addition of 2,134, a 1% increase quarter on quarter. During this quarter, we also added more than 2,000 freshers. That takes the tally for the year to 6,000. So that's in line with what we had planned for H2. We probably will add 1,000 more in Q4. Insofar as fresher planning for next year is concerned, we expect to significantly increase the numbers next year. So that's a plan, and that's on the back of the strong pipeline that CVK was referring to. Attrition for the quarter, December quarter, is at 13.2%. For the last 5 quarters, you would see the attrition has been in the similar 12.8 to 13.2. That's where we expect the attrition to stabilize. We project to close this fiscal around this 13.2% range for us attrition is concerned. I'll probably stop here. Maybe we'll open the floor for questions and take questions from the floor.
Hello. Yeah. Good evening. This is Annapurna from the Economic Times. Could you firstly elaborate a bit more on the optimism driving the outlook, and especially in the context of the new US regime coming in this month? How do you see the demand evolving this year? Secondly, and related to that, do you expect any policy changes to be impacting the Indian IT sector? Secondly, attrition has increased. How do you see that affecting margins and growth going forward? And thirdly, in terms of hiring this year, for this calendar year, or for FY26, do you have any specific plans that you can share?
Yeah, I think the first question was on demand environment. We have seen, actually last quarter we did call out that there is some pickup in demand in financial services, and there is some green shoots in